Nasdaq trade. Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Phil Mackintosh. He's our chief economist at Nasdaq to review how policymakers and investors are modeling out the global economic impact of the coronavirus as we start to look to the other side. Phil, it's great to have you with me as always. And it seems like the news has not really gotten much better over the course of the last week.
I think you're probably right. I mean, the markets have kind of gone sideways as well. The cases are slowly coming down. The good news, I guess, is like last night we got Congress to agree to another $500 billion injection and stimulus, which adds up to a huge amount of GDP. And I think that's supporting sort of top-down economic analysis of how much impact this will have net when everything's said and done. Europe is getting back to work slowly, and some of the countries have plans in place that are opening up shops this week and next week. So there's a little bit of a bright spot on those fronts, but the US data is not that great. Yesterday, we had a little bit of bad news on the remdesivir drugs and not doing as well in the first rounds of testing in China, although the company said that actually there wasn't enough people in that test. So it doesn't have a lot of statistical reliability, and there's a lot of things going on in America now with that drug and other drugs coming forward. But listening to doctors, that's not something that's going to be fixed next week. It's something that we're talking about fall and maybe into next year to get things like vaccines ready. It's a long way away from where we are right now.
All right, let's take a look at our first chart of the day here. As we do each day, looking at global COVID-19 data, seems as if that we're past the peak or falling now in many of the Western countries.
It's great news. And today we decided to switch it up and look at death rates because the pattern that we've seen the last few days on new cases is in place. Deaths follow about 2 to 3 weeks behind because this seems to be a really prolonged and protracted flu type illness that people get. So the US has actually seen a little uptick in this week's death rates, but every other country in the world looks like it's got deaths under control as well as new cases under control, which is great news. I guess the only thing that we don't really know is how did China and Korea manage to get death rates to come down as steeply as they did, especially China, because Italy and Spain and France, which are a little bit ahead of us, are kind of stuck at a very similar rate of deaths per day.
Moving along here, we got the fourth U.S. stimulus bill passed by the House last night, going to President Trump's desk today. Do you think it's going to be enough at the end of the day?
I guess no one knows, but the point of this chart is to show just how much and how quickly the government, whether it's in the fiscal sense, has injected into the economy. I mean, obviously, this is an unusual slowdown or recession. I guess it's going to be a recession where we've basically forced the country to stop in the space of a few weeks. It just in contrast to the credit crisis, which was a very sort of dramatic slowdown, very close to a depression. You can see the scale in terms of the height of the net fiscal injections in blue never got to the level that we're at already. And it took over 1.5 years to get to that level after the TARP and the other funds that came in later. We're already at nearly $3 trillion worth of fiscal injections, which is about 15% of GDP. So we've reacted quickly and on grand scale, and hopefully it's enough to get people through the slowdown and wait until we get back to work.
All right, moving along here, U.S. unemployment, the numbers were high with jobless claims just yesterday, but they are slowing down a bit. Perhaps that could be the peak for job losses.
Yeah, and we've talked about this a couple of weeks ago. The daily data looking at hours worked showed that most of the people that got let go or furloughed was in the middle of March. And so the expectation is that this will keep coming down. This is obviously initial jobless claims. So the cumulative total is also important. And it looks like continuing claims is around 16 million and the unemployment around 11%. Some are forecasting that to go to closer to 20%. So this is a big deal. Hopefully it's only a big deal for a couple of months, in which case it most likely won't have a major effect on companies and their balance sheets and on the health and well-being of home finances as well. But that's really the question, and it's related to all the questions you've already asked today, is how long will this protracted slowdown or forced slowdown last? And when we start going back to work, how quickly will everyone start spending again?
All right, let's wrap it up with U.S. manufacturing, because this is really the impact for the supply chain and what that means moving product around globally.
Yeah, and the services PMI was even worse, which is important just from a historical perspective, because really the services confidence level and services employment was what was holding the stock market up in the last year and a half, and services really was outperforming in America and around the world. Now services has been crushed in terms of the level of services output. Manufacturing has obviously slowed down as well. But with both of that happening, consumer confidence has taken a dive as well. And I think if consumer confidence can't rally back, that's when we might have problems getting people to go back and spend as well as going back to work.
All right. Well, we like to end these things on a positive note, and it's Friday, so that's a good thing. Phil, thank you so much as always for joining us throughout the week.
You're welcome, Jill.
All right. Thanks for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.